We broke the 60,000 mark. So, in honor of that moment, in today's episode, we are going to do a portfolio review for both my Robinhood accounts and my M1 account. We'll be looking at the weekly gains or losses, just overall general dividend activity for the week and maybe the month, and how I got to this value and some overall strategy of the two accounts. But first, if you want a channel that is going to help you speed up your journey to financial freedom through dividend growth investing, stately investing is the place for you. So hit that like button, hit that subscribe button, and turn on notifications, and let's get started. All right, so looking at my Robinhood account, we are up to $21,797.01. And for the week, we were up almost a percent. So you can see 0.95% here, a gain of around $204. I did not change any of my stocks for the week. I haven't really made too many purchases or added any new stocks to the portfolio. If we look at the year, we are up 13.67%. And you can see at the beginning of the year, I wasn't investing in my Robinhood account. It was at zero until about March 16th, at which point I deposited a large chunk of money. And you can see how it has grown and fallen over time, right? So there was a big dip in September down to the end of September, middle of September to the end of September. That was a bad week, right? And remember, my strategy for this account is purchasing dividend stocks as normal, but these are dividend stocks that I believe are undervalued at the time of purchase, right? So I'm trying to purchase things at a price that I think is a good deal, and hopefully I am earning money on those stocks. So you can see things like what my portfolio is made up of. It's Store and O. Those are my biggest holdings in this account, along with probably AT&T. But you can see that there's a couple REITs. There's Starbucks, so retail kind of consumer goods. Public Storage is another REIT. Prudential, which is financial. Coca-Cola, right? So kind of all over the place as far as industries. Just a mix of things that I think are good values. And so let's jump over to the account actually and see kind of the makeup. So again, my total portfolio value is sitting all in stocks. There's no cash currently sitting, well, $5 worth of cash sitting in here. And you can see again the stock allocation. So you can see Store makes up the biggest chunk, followed by AT&T, followed by Realty Income, right? And then Altria, and so on and so forth. You can see the total returns, right? So what am I gaining money on and what am I losing money on? You can see Store Capital has been the biggest gain. This is sorting by total return. So Store Capital has, netted me almost $2,000, which is great. Starbucks is 191, Public Storage, right? So most of these are small gains. I'll grant you that. Obviously, Store, I did a good job on purchasing at the low, right? My average cost is less than $21, and its current price is at $28. I still think Store Capital is a great buy. If you check out last week's video, I'll put a link up top. You can understand why Store is my favorite stock. And feel free to leave comments below on what your favorite stock is, especially in the dividend growth area. But overall, you can see that Store just has been killing it for me in this portfolio. But overall, most of these have been positive returns. Now, there have been some negative returns. Bank of America, I've lost, $14. No big deal, especially for the amount that I have in the account, right? It's almost $1,200 here in Bank of America stock. And, I've been just trying to purchase it at that $25 level because I think that's a pretty good level for Bank of America and where they're at right now. And their dividend yield is sitting right around 3%. Altria, I've been just trying to purchase anytime it's below $40, right? So right now I'm at $40.28. So I've lost about $52. And I just keep adding to this position. Even now at 30, it's at 39.15, a great price. I think I'll continue to buy there when I have cash flow. And then Gilead. So Gilead, I bought a little high, right? So at $65, and it's now down to $60, but it was even worse, right? So Gilead actually bumped up quite a bit this week. Actually, let's jump into Gilead if we can. And you can see for the week, that is actually still down, right? So it's down 2.5% for the week, but you see this giant spike here, basically when the FDA approved remdesivir for COVID-19 treatment. That was a big kind of boon to the stock, and then it quickly kind of fell off from there. So overall, I think Gilead is a smart investment. I also have a video on Gilead. You can check it out. I'll put a link down below and hopefully up top. So I think, Gilead is a solid choice, and I'll continue to buy. I think long term, it just has a monopoly on several or on HIV drugs and these antivirals, and so I think they are positioned well for the future, and it's definitely a long-term hold for me. So back to the account, AT&T is where I have been losing the most money. Also my second biggest holding here, so at $2,700 in current value. I've been buying under $30, and AT&T also had a decent week, but that has only brought it up to $27. So right, I almost have 100 shares of AT&T in this account. Have lost over 150 some dollars on that. So if we look at AT&T and we look at the week, it was actually up 1.3%, and this was just based off of a very good earnings report, right? So it spiked quite a bit on that day, and has stayed pretty much high, right? Like it's come down a little bit on Friday, but overall it looked pretty good for the week. So let's jump back into the account again, and we can go to history. And you can kind of see what's been happening with my dividends, right? So you see a big dividend coming from AT&T at the beginning of November. It's not going to hit my October summary, but you can see owning all of those shares pays off, right? So this is $42. That's almost enough to buy me 2 shares, right? Just this dividend alone is going to be reinvested into AT&T and buy me like a stock and a half of AT&T. You can see that Store Capital paid out really well at $93. And Realty Income pays monthly, which is great. So $7.50 monthly is not bad at all. Altria, has a very high yield right now, and that's why I'm continuing to buy. Its yield is at around 8%, and I received around $16 in the last payout. And then Coca-Cola was $7.31 back at the beginning of the month. So overall, my dividends have been looking good, right? Some of my big players, and just having these large positions, right? These are my 3 largest positions. You can see how it pays off. So Realty Income might look a little small, but again, remember it pays monthly. So that's, basically $90 a year. This is going to be, by the time, Store kind of reinvests, right? With this, I bought additional shares because of the large payout. By the time the year's over, this might be up to $100 each quarter. So that's $400 a year. And then AT&T, I have a large position in now. So that's, going to be pretty close to $200 a year, right? So overall, I think this just shows the dividend reinvestment strategy. The key is reinvestment, right? So keep making sure those dividends keep going back into the stocks if you believe in them. Don't try to take those payments and use them for cash unless you absolutely have to. So why don't we jump over to the M1 portfolio and see how it performed for the week. Okay, so we are in the M1 portfolio, my passive income portfolio in M1, and you can see for, I believe, this is the weekly view. You can see I was down. So you might be asking yourself, well, Burnett, how can you be down 1.5% in this account, but up 1% in the other account? Well, remember the mix is different. So even though there are dividend stocks in both, the mix is very different. And that, again, I'm trying to buy undervalued stocks in the Robinhood portfolio. So that portfolio is more likely to be up overall. Whereas this passive income account is more diverse. It has, I think, 39 holdings right now, and it is spread out across multiple industries. And this one tends to go more in line with what the overall S&P is doing. I believe the S&P was down for the week as well. But the key really here is the amount of earned dividends that I'm making each month or each week. So you can see it was down, right? The overall price down $455, and then earned dividends is $13, netting out to a negative $442. So why don't we look at the past year? And we now have over a year's worth of time in this account. So you can go back and look at a previous video that I did tracking my overall year of dividends. That's a great video because you can see all of my accounts, not just M1 and Robinhood. I'll post the link up top. But you can see that this account has been doing fairly well, even better than my Robinhood account over the course of the year, right? This has had a little more time, so the return has been better. But 16%, you can see the total gain is around $2,700, and the market gain has only been $2,000 of that. A lot of that has been earned dividends. So remember, that's the strategy here we're talking about. So why don't we look at the activity, and you can see what's been happening for the past few days. So this is just my continuous deposit, right? So that's another difference between these accounts, is that I continually just automatically invest into my M1 account, and it buys, it buys what is making up my percentages or my allocations. And you can see in this last buy on Monday, it bought Store Capital, it bought Verizon, AT&T, Realty Income. So it's always trying to balance out the percentages in my portfolio. And you can see that these are the 14 stocks it decided to buy. It excludes anything under $1. So Starbucks would have purchased 3 cents, and Equity Lifestyle Properties would have purchased 15%. So overall, it's done a good job. This is done, just consistently taking that money right out of my account, so I never see it. And we can go back to the overall activity here. So besides the just normal deposits, there was a set of buys here because of those large dividends, right? So remember that Store Capital paid out. Again, I have a decent chunk of Store Capital in this portfolio, so I made $18 here. Realty Income monthly, $3.23, and then Leggett and Platt, $3.83. So that, along with some additional cash that was probably sitting there, I bought 4 stocks of $29 worth of stock. It bought more Realty Income. It's buying Gilead because, again, it's priced low. It's buying AbbVie. I added some percentage to AbbVie based off of this last month's analysis. I wanted to up the allocation of AbbVie. And so you can see that it's doing those purchases automatically whenever I have cash. You can see previous to that, there was another buy, right? So $26 worth of cash was generated, mostly off of this large Philip Morris dividend of $25. And that was after I had hit that $26 mark, it decided to go ahead and purchase, right? So I got some Illinois Toolworks in there as well. So overall, you can see that this strategy is just very focused on dividends and making sure that those dividends are reinvested into solid companies. So again, check out that video of my yearly account, and you can see how the dividends have just grown over time and how the strategy really works, right? So I'm not obsessed with prices, especially in this account. I'm not, I'm rarely checking this account unless I need to make some changes, and that basically only happens quarterly. So I try not to shift things around too frequently in this account. Remember, patience is key for dividend growth, and just letting your stocks do the work for you, letting your money work for you. So I think overall you can see the differences between the two strategies. Hopefully you guys got something out of this video. If you did, leave a comment below. Feel free to like if you want to. Feel free to subscribe if you want to. I appreciate all the support out there, and I will see you again next week.